Good morning and welcome to the eStar Resources PLC investor presentation. Throughout this recorded meeting, investors will be in listen-only mode. Questions can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your question and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all questions submitted today and publish responses where it's appropriate to do so. Before we begin, we'd like to submit the following poll. I'd now like to hand you over to Alex Walker, CEO. Good afternoon, sir.
Thanks very much, Paul, and thank you very much to everyone for taking the time to join us on this webinar today. As always, I'll try and keep it quick because I know everyone's quite busy, and look very much forward to answering your questions as well, and obviously for your reaching out directly to the company or via our investor relations team. Today's going to be a complete run through. There's obviously been a lot for those following the stock that's been announced in the last month or two, and so I'd like to give an overarching view of eStar, what we've achieved and what we hope to achieve in the coming months and years. So a reminder, eStar is a Kazakhstan-focused copper and gold explorer with a specific attention to Kazakhstan. We've been operating in that country for more than 5 years and coming up to 4 years as a listed company. What we've managed to achieve in that time is not insignificant by any stretch of the imagination. We've gone from having 4 exploration licenses in Kazakhstan, and without diluting shareholders via the acquisition of new projects and issuing shares through that acquisition, we've achieved a JORC inferred resource in Vakuba at 20.3 million tonnes at around 1.1% copper, which very recently we've announced is now fully funded through to production by a global EPCM, which is engineering, procurement, construction and management contractor, who've achieved over 500 of those projects globally. We've got an exploration target in the Rulika deposit, which is how Vakuba started before we were able to drill and verify the historic results. And that's nearly double the size of Rulika. It's a similar tonnage, but twice the grade at 23 million tonnes at 2.4% copper equivalent. We very recently signed a plus 25 million exploration joint venture with Endeavour Mining, which is a global top 10 producer and one Explorer of the Year this year. And we have been progressing our other strategies in exploration, under which we've applied for and received 3 porphyry and epithermal gold and copper licenses in the Karaganda region, which I'll take you through. Fully diluted, not fully diluted. We recently undertook a placement with Endeavour Mining, which involved a convertible loan note. The reason for the convertible loan note was because eStar didn't have the full overhead to be able to issue all of those shares at once. And we also had some warrants that we wanted to keep our available overhead to allow shareholders to convert those warrants. And so with the convertible loan note converted, which we expect to happen at the end of January, our shares on issue is about 524 million shares. Just a quick summary there, we do have some warrants and options. Just in very short, we've got about 3% at 5p, so significant premium to the share price today, and about 7% at 3p, which are the ones expiring on the 31st of December. And certainly I hope that we'll see a lot of those exercised, and hopefully when that has washed through and some more share price appreciation into the new year. On conversion, Endeavour Mining will be our largest shareholder with 15%, and the board will be the 3rd largest shareholder with about 12%, of which I'm now 11%. This is the first capital raising which I wasn't able to participate in since we listed. Just a reminder on Kazakhstan and why we're there. The country's nearly 2.7 million square kilometres and is a geological gem and powerhouse. It has not had a significant amount of exploration realistically for over 50 years. And really in the last 4 or 5 years is the first time it's opened up with a new mineral code, which is modelled on Western Australia's, which allows groups like eStar to come in and take advantage of that. It's already an existing major producer of copper, uranium and gold, the largest in the world for uranium. And it has multiple top-tier deposits of different deposit styles. Jezkazgan is said-hosted copper, 22 million tonnes of contained. Aktagai is a porphyry, which is 12 million tonnes of contained. Vasilkovskoy is orogenic or intrusive related gold, depending on who you ask. And that's about 15 million ounces of gold. And it's some of those deposit styles which we're targeting as an operating company. And with all that, it remains to be one of the cheapest places to operate in the world. Three operations in Kazakhstan are in the lowest C1 cash costs of all copper mines globally, which is very, very telling. And as I like to say, it's the cheapest place in the world to dig a hole. It's also a critical transport route. It takes a third of the amount of time to transport goods from China to Europe through Kazakhstan than it does by sea, which makes it the beating heart of the One Belt, One Road initiative. So we've seen China investing heavily in Kazakhstan. We've seen Europe in the last 5+ years investing heavily through groups like EBRD, European Bank for Reconstruction and Development. And very recently, we've seen the USA come in with Donald Trump's administration writing a check for $900 million for the development of a tungsten project. And I think we're going to see a lot more of that into next year. It's also, we've seen a lot of majors come into the country. Fortescue came in about the same time as us, First Quantum in the last few years, Ivanhoe Mines recently, and now, thankfully, we can add Endeavour Mining to this list as well. So just a reminder as to the various belts and why we're focusing on this. On the East region in the
Ladies and gentlemen, do you bear with me 1 second just while we reconnect Alex. Alex, do bear with me 1 second, just trying to reconnect you now.
And I've already.
Ladies and gentlemen, do please bear with me just while we connect Alex back to the call.
Is that Kazakhstan mines should trade at a premium, and Kazakhstan companies should trade at a premium to other ones, because you can get projects into production faster and cheaper than just about anywhere else. And that's due to a supportive government and due to a supportive population. And in the East region, for example, the mine nearest us, Nikolovskoy, started operating or was discovered in 1749, which was before the first fleet came to Australia. And so, we're really happy to be operating in this country, and we see a bright future for Kazakhstan. I've gone through a few of these, but just to summarise our strategies, traditionally we've been going for the volcanogenic massive sulfides, which is what we consider to be infrastructure-led and a low economic threshold for development, the sort of projects which juniors can fund into production if they need to, in a reasonable market. And so that's been our primary focus, and we've done a very good job of developing one resource, one exploration target, and a couple of other really exciting, what we consider to be exciting geochemical and geophysical anomalies, which we'll talk through. And then the second strategy was developed in the last few years, principally when we started with the BHP Explore program in 2024. And we could do the real grassroots work, right back down to breaking down belts and looking at hundreds and hundreds of lithocaps and their proximity to faults and the alteration signatures. It takes a lot of time and effort to do this sort of work, and often a bit of money. So we were very fortunate to be part of that BHP Explore program and be able to develop out that strategy, which is starting to reap the rewards today. So focusing in on the East, strategy number one, our VMS, as I mentioned, we've got the two areas, Vakuba, 20 million tonnes at 1.2%, and Rulika, with an exploration target up to 23 million tonnes at about 2.4%. Now I'll go through that in a little bit more detail, but combined, if we were able to convert Rulika to an exploration target, from an exploration target to a JORC resource, we'd have over 650,000 tonnes of contained copper in a JORC resource, which is nothing to be sniffed at. I mean, that is an absolutely significant, especially at the grades approaching 1.8 to 2% on average, that we'd be achieving with those two deposits. So, you're staring down the barrel of equivalent companies that are permitted to get into operation in the hundreds of millions to billions of dollars range with those sorts of converted resources. So we already have the assets in play, I believe, that can see us into that level, but we don't want to stop there. and we'd like to make more discoveries, and so that's what we're setting up to achieve. So 2 Soviet deposits, additional potential for discoveries, but in an infrastructure-rich region where you have smelters, you have underfed concentrators, you have railway lines and roads that service these operations and have been for hundreds of years. So it's a fantastic place to operate, and you've got a population that's been working in mining, for decades or hundreds of years, as a see-through back to history. And so, as I said, they're very, very supportive. And an example of that is the fact that our Rulika deposit, which is in very close proximity to the village has already given us approval to drill on that location, despite the fact that we were still waiting for environmental approvals. So that just goes to show how supportive the population can be. Quick summary on Vircuba. So the global EPCM contractor is a group called Hong Kong Shanghai Mining Services Limited. As I said before, they've built over 500 plants globally, and they have had a history in the past of operating gold mines in-house, and they've just in the last few years started to sequester mines, maybe not sequester, but reinvest in mines themselves. So they have 1 or 2 of their own operating gold mines in Africa. And this year they've signed at least 6, I believe, agreements with groups like eStar to not only invest in those companies, but also invest in the development of the assets, bringing their expertise and bringing their financial capacity, their balance sheet to progressing these projects. So we're absolutely delighted to be working with them. We've signed a binding heads of agreement, and the process now is to convert that as quickly as possible into a full joint venture agreement. We have 180 days to do that, but I would expect to execute that considerably faster. After which point they'll be investing around $1 million into additional drilling into the Vircuba project, and that will inform the feasibility studies, which will be completed in-house, and then follow on from that, assuming a positive result, they'll fully fund it through to development. So speaking with Shanghai, they expect to be able to build the operation and the mine for around $65 million. That's a phenomenal result. That level of investment, if it was the same asset in Australia, for example, certainly my view, it would be very difficult to build a 1 million tonne per annum plant for anything less than 150 or 180 million US dollars. So that's another real indication both of the quality of the Chinese as the operator, but of Kazakhstan as a jurisdiction, and how we certainly believe we can progress this into production. So that's hugely exciting for us to take that forward, and it's very arguable to say that within 3 years, eStar will be a copper producer and have a not insignificant cash flow. If we were at these prices, based on future cash flow, discount to future cash flow, I'd suggest we're trading at a very, very significant discount to what that would likely be. The next project is the Rulika deposit. Again, we've just released a JORC exploration target. It's not a spurious exploration target, as some are, with a few rock chips and an extrapolated trend. This is historic Soviet drilling that's been digitized, handed to a third party. We've used sensible cut-off grades, done modelled pit shells over this, and we've restricted the exploration target to those results. And the results are absolutely outstanding. There's obviously copper oxide and sulfides at surface, which I was able to pick up in my last site visit when I was meeting with the local mayors. Multiple payable metals, excellent infrastructure, near surface, and a long mineralized trend as well, with potential exploration upsides. So a very, very exciting project. I do want to taper expectations to ourselves and to the market that the proximity of the village is something that we are very much in consideration of. And so we'll be working closely with the local community and also federally to help advance our permissions here. But I don't expect that to happen overnight, but I certainly do think that it's feasible, in speaking with the local politicians and the local residents, that they would support such a move. And so we feel that it's perfect. We're perfectly able to talk about this as a potential future asset for us. And the pipeline is no less exciting, obviously de-risked largely because of the fact that we have 2 deposits. but nonetheless, we've got the Talaskoy historical deposit, which was quite small, ran about 4 million tonnes, and we have an IP anomaly over that. And we have the Rulika North area, and you can see both of those we drilled in 2025, and we're expecting to update the market on those results in the very near future. But what we have is very, very large, very, very strong induced polarization signatures, which is the indication of disseminated sulfides. And what we hope to be able to do is use that as a targeting tool to find the massive sulfide source. And so that information, along with the geological information from the drilling, we are really excited to extend that work program next year and hopefully deliver some exciting new discoveries onto the balance sheet as well. A little bit about the exploration joint venture with Endeavour Mining. You can see the two areas highlighted there, the two areas of interest that we've basically signed on to explore with Endeavour. In the south, we have the Karaganda region, which is further to that has been extended out to the west. It's a very, very interesting area out to the west, very, very underexplored and misunderstood. We've got a lot of data on that region, and we believe that we are well ahead of the pack in terms of doing new exploration in that area. So we're really excited by that. But it's a very, very significant land package, and so we're going to be working closely with the team at Endeavour to try and shrink those areas and find areas of focus within these large land packages. In the north, we have the Stepnogorsk region, where the biggest mines are Vasilkovskoy. Other ones include Bestubay, Regorodok, which is very interesting. That was owned until recently by a Western private equity firm called Resource Capital Fund. And recently Zijin purchased that for about $1.2 billion. So you can see that the interest, foreign interest in Kazakhstan is certainly ramping up, and that's really exciting. Initially, we intend on spending $5 million over 2 years with Endeavour. I was just in London, and we've approved the first year's work program and budget, so we'll be working through that with them from now onwards. And then on the assumption that we find something to invest further into over those 2 years, then that stage 2 will be $20 million, and they will move to a 70% ownership of that joint venture. The third stage is they need to carry the deposit or deposits through to feasibility study. And to be clear, if there's 2 or 3 deposits that warrant further investing and to be carried through, then each of those will be carried through to feasibility. And then when the first one hits feasibility, they get to 80% of that project. East Star will be managing this for the first 2 years until 51%, and after that, Endeavour will have an option to take over the management. We receive a fee for that management. And there's also bonus payments based on the resources that are converted, both at the initial maiden resource stage, which we expect to be stage 2, and then on the pre-feasibility stage, a top-up payment, if you will, on stage 3. So what we hope to achieve, obviously, is 20% of at least one, +2, +3 million ounce gold deposit, of which East Star will receive bonus payments along the way. And then, with any luck, we'll have some operating mines that help pay for our 20% allocation to build a significant operation with such a fantastic operator. The 3 additional licenses we have in that belt is Picket, Snowy and Judsa. Picket and Judsa are a bit more recent, and Snowy we've had for over 12 months now. We picked up as part of the BHP Explore program. Very, very exciting prospects, very, very big alteration footprints that we're now breaking down and doing a little bit more work on. Snowy, people should be more familiar with. We did IP and some geochem throughout 2025. We are expecting to advance that through 2026. I know we indicated previously that we would consider drilling it earlier on this year. The reason that didn't go ahead was ultimately because we were in conversations with Endeavour, and in fact, we had interest from another party on Snowy. And so instead of progressing the project at our own expense, we decided to wait to see how those conversations would go. So we would like to take that forward in 2026, either by ourselves or with another prospective partner. But it's a very, very large anomaly, nearly 4 kilometres long, both alteration and geochemical signature. We've got gold in veins at surface. And importantly, we have 2 gold mines, one on the west and one on the east. In particular, the one on the east was running at 50, that's about 50 grams when it was operating back in the late 1960s. And so we are certainly in an area where we know has gold deposits, and now with any luck we can find one on our significant license package. A little bit about Pickett and Jutsa, and I think this is probably more for the geological boffins, but ultimately these are 2 incredibly large advanced argillic alteration footprints. It's a similar age and setting to the Macquarie Arc in Australia, which has some very significant, both in scale and grade, copper, gold, porphyry, and epithermal deposits. And so that's ultimately what we're looking for. And just to remind the market, we started off with over 200 targets, and we visited about nearly 30 of them this year. And these are 2 that came out for us as quite interesting, that require additional work. And so the field teams have been out there in the last few months, conducting a little bit of extra field mapping and some rock chips. And so we hope to be releasing results to that sometime early next year as well. So there we go. It was a quick presentation. I really appreciate everyone's time. 2025, it felt like a little bit of a slow burn for investors, and I really appreciate everyone's patience who are shareholders on this front. We were working incredibly hard, as you can all see now, throughout the year to try and achieve the results we've been able to deliver at the end of the year. And so we're absolutely delighted to be able to have these partnerships with such significant players as Endeavour and as with Shanghai, to take us forward through 2026 and beyond. So what we hope to deliver in 2026 is a significant amount more news flow. We've got what we consider to be over $3 million already secured in funding for exploration. That's $1 million into Vancouver and over $2 million into the Endeavour joint venture. And that's non-dilutive at company level to eStar shareholders. For the assets that remain completely in control by us, we will manage the exploration programs accordingly and the risk reward of each of those programs. We expect to advance the permitting on the Rulika deposit, advance the work on the 2 VMS geophysical targets that we have on that same license, Talos, Skoy and Rulika North, and advance the 3 lithocaps as well, in terms of additional work that we'll undertake there. We may well be doing additional partnerships. Please don't hold me to that. I think we've achieved quite a lot in that front already, but we have had some interest, and I certainly don't mind the strategy which we're following through with at the moment. And we'll continue to do business development, looking for assets which, if we feel have a significant value add to the portfolio, and if we can do something at the right price, then we'd like to bring that into the eStar portfolio as well. So very, very busy 2025, even busier 2026, and we're really, really excited to be able to deliver for shareholders. So thank you all for your time, and I am ready to answer questions.
Fantastic. Alex, thanks indeed for the presentation. Ladies and gentlemen, do please continue to submit your questions just using the Q&A tab situated in the right-hand corner of the screen. Just while Alex takes a few moments to review those questions submitted today, I'd like to remind you that a copy of the presentation, along with access to the Q&A, will be available post the meeting. Alex, as you can see, we had a number of questions both pre-submitted and throughout today's presentation. Thank you to all the investors for submitting those. If I may just ask you to click on that Q&A tab, start at the top, read out the question where appropriate to do so, and give your response, and I'll pick up from you at the end.
Thanks, Paul. As always, I'll be reading out every question and answering every question. And so I'll start with the first one, of course. First, congratulations on your recent success. Thank you very much. Your strategy is clearly paying off, and I believe will continue to do so. From an investor's perspective, part of me hopes this remains a hidden gem a little longer so I can add more shares in the near term. At the same time, I'd prefer the discount not to be too as steep as it is now. Do you think this significant undervaluation could be partly addressed by pursuing a dual listing on the Australian Stock Exchange? There is no doubt that this topic has been discussed at board level, and I've undertaken fairly significant due diligence on the process, understanding the timing and the process and how it would work. And also, I've looked at comparisons to our E-Star peers. I don't have an up-to-date, sorry, not our E-Star peers, our ASX peers. I don't have an up-to-date one. Mine's a few weeks old, and obviously our share price has increased significantly in the last few weeks. But certainly at that time, we were trading at about what I consider to be 20 cents in the dollar on an enterprise value per resource tonne basis, and that was only for Vancouver. If we were able to convert Rulika to a JORC resource, we would have been trading at about 7 cents in the dollar. So as you can imagine, a close to 10 times re-rate for an ASX listing, potentially, if we were able to convert that, is a pretty serious discount and something worth considering. E-Star has not committed to that process at this stage, and I can't say if we will intend to commit to it just yet. But what I will do is continue to look at it, and if it feels like the right thing to do for E-Star shareholders, then we'll be certainly having that conversation at board level and making that decision. But we're acutely aware of how to undertake the process, who we would use as advisors, the timing, the constraints, and the cost. And so if it's the right thing to do, we'll certainly be pulling that trigger, and it's something which I will be reviewing again in early 2026. Do you agree with the 35 million warrants that expire before this year end? The 74 million shares convertible at 2.3p from Endeavour within 12 months, and other warrants options are more beneficial on strengthening the balance sheet than the single-digit percentage dilution effect. Yes, absolutely. The board of E-Star has always been tried to be pragmatic about raising capital. Unfortunately, it hasn't always played the exact way which we wanted or anticipated, and which is why we've ended up raising funds at, between 1 and 2p a few times. But our job is to spend money as efficiently and effectively as possible for what we feel is an outsized return on that invested capital, because we are spending shareholders' funds. The Endeavour raising at the time was at a premium, I think 6 or 7% to the market. So that, by definition, is less dilutive based on the pricing. And there's now, we're seeing a few warrants at 3p get exercised that expire at the end of December. I'll be very, very happy to see those funds come in, not only because I see it as a reward for shareholders who invested with us at a time that the company needed capital, and I, my main objective is to see shareholders make money out of our company. So I'm really, really happy to see people exercising, because that means that we've started to achieve that job or that role. But also, what we can achieve with additional capital is just so significant. If we've got a little bit of flexibility, the stock market doesn't look at a junior company as perpetually come capital raising, and therefore we don't achieve that discount that comes with that stigma, then we can apply those funds efficiently, we can achieve greater exploration outcomes. And as I said, you've got the balance sheet that maybe you can look at a bit more flexibility with farm-ins to other assets, and people won't say, hey, how are you going to fund this? So having additional capital on the balance sheet is always beneficial, if not just to remove that stress from my life, but also remove the questions from certain investors' mind that they might be coming in the near future. So thank you for that question. And yes, I agree. I'm very happy to see those funds come in. The next one is a dual listing on the ASX being considered. So I think I've answered that already. Thank you. Could you please provide an update on the joint venture with Geotech regarding the said-hosted copper exploration? Certainly, it's not something that we've actually spent a considerable amount of time on this year, unfortunately. The reason behind that is very much like copper porphyry exploration, said-hosted copper is a lot of quite significant early stage work, which is not especially cheap, but is is difficult to get attention from investors for. And maybe if the share market changes, or if eStar starts trading closer to fair value, which I'd still argue is a very, very significant premium to where we are today, then that is something which we could potentially approach on our own. But to do this, the said hosted copper exploration strategy properly, my view is the company would need to commit $500,000 to $1 million at the very least to pick up a big enough license package and do the initial work, and then potentially still need to attract large investors. In 2025, the board decided that was not a strategy worth pursuing, that wasn't the best use of shareholder funds. That might change in 2026 or 2027, as I mentioned. But until we have a partner similar to the deal that we signed with Endeavour, until we have a partner like that that's willing to help put a significant amount of capital to fund that strategy, it's something that I'm disappointed to have on the back burner, but something that I'm not willing to allocate that percentage of our available capital to, based on the risk, based on the risk of that exploration strategy. Okay, the next question is, first of all, congratulations to Alex and the team. Absolutely fantastic news flow over the past month. Endeavour, Shanghai, new promising licenses. Oh, that's just a comment. All right, well, that's very much appreciated, Country K. The next one is looks to be the questions. Okay. You've clearly been early in Kazakhstan and built a large digitised Soviet-era data set. As more majors and juniors enters the country, where do you think eStar is genuinely ahead today? In data, targeting process, land position, or execution? What's the hardest part for competitors to replicate at this point? That's a really good question. I would say twofold. One, it's operating efficiency and capacity, and the other one is a data set. I said in a Crux interview recently, I believe our data set's unparalleled. I'm sure that there'll be plenty of companies that would like to jump in and argue the case on that. But, we reviewed over 150 projects before we pegged our first license in Kazakhstan. And so from an individual project basis, we'd be clearing, 200, 250 in our database now. Now, that doesn't mean they're all good projects and we're just lining them all up. What it means is that we have data sets and examples that you can draw upon for your greater exploration strategy. So when you have the geological maps and you have the geophysics maps, which cover the entire country, and we'd have essentially the same ones that anyone else would have, then that gives us an extra value add, being able to draw down on local examples of those data sets. So there's no doubt that the data set is of significant value add for our offering. But then our operating efficiency as well. We are able to pick up and drop licenses, I believe, as good as anyone, local or foreign, in Kazakhstan. And we're able to go through the permitting processes. We have an in-house team that can execute all of those things, which means that, A, we can do it efficiently by prioritising, and we can do it cheaply because you're not paying expensive consultants to execute these, and you can manage them in-house and prioritise your team. So I would say both of those things are the biggest value add. I'd argue that that's certainly why we got into the BHP Explore program. It's why Endeavour Mining have opted to work with us. And I won't speak for Endeavour or Shanghai, but I certainly feel, based on conversations with them, it's also why Shanghai have opted to come into Vancouver and then indicated that they'd like to look at other projects with us in Kazakhstan as well. So, fingers crossed, we won't be stopping at the two things that we've presented today. About the Soviet-era drilling data in general, can you give us some colour on how that data has compared to modern drilling, where you've been able to twin or validate it? Have the historic grades and data generally held up? Look, that's a really good question, and it's a difficult one to answer because at the moment I would say that we don't have a big enough comparative data set to be able to use to do a proper geostatistical analysis. In some instances, when we've drilled close, within, let's say 10 or 15 meters, which would probably be our closest to a historic drill hole, we have had higher grades and wider intersections, and in some instances we've had lower grades and smaller intersections. So it's very, very difficult to give a proper geostatistical analysis at this stage. I'd like to be able to do that, obviously, in the not too distant future, but realistically we would need to more closely twin probably 5 to 10% of historic drill holes to do that. And that's not how East Star had been allocating its capital. We'd largely been focused on drilling gaps in that resource model in the hope of growing the resource. And so the drilling the last few years has been more of a priority in outlining the resource in more detail using the historic data rather than specifically validating the historic data. I know that's probably not as clear as you'd like, but ultimately, yeah, the reviews are a little bit mixed. What are the next milestones for H1 2026? Will the outstanding drill results help increasing the size of the current resource? Any drilling planned at Snowy in 2026? I won't preempt the drill results by talking about the expectation of effect on Vancouver. What we hope to achieve in 2026 is, I've outlined in the presentation, we want to be applying for licenses with Endeavour, and we want to be doing the first pass exploration programs with those, which we expect to be things like soil sampling and geophysics. We'd like to be drilling at least 5,000 metres at Vancouver, funded, managed by Shanghai. And then for East Star proper, we expect to progress Rulika North and Talovskoy, as well as a few other anomalies that we think are worth following up. So, what we hope is to be putting out drill results from this year's drilling in the very near future, explaining the geological context of those, and then being able to put that in the announcement of the follow-on work programs in 2026. Hopefully, some of the things that we're progressing in 2026, we actually don't even know about today. Like I said, with the Endeavour joint venture and so on, they'll be ones that we'll still be formulating over the winter break before we get on the ground next year. Snowy, yes, I would like to see Snowy drilled in 2026. I mentioned that we have had outside interest, so I don't know if we will close that. I'm not 100% convinced we want to close that. It's something that the board will need to make a decision on. And I would suggest that the results of that, it's not really a process, it's a discussion. The results of that discussion, which should comfortably close over the winter period, will dictate our work program. If it's East Star, then yes, it's likely we would run a few IP lines. And then we would, if there's an anomaly over that area that achieved the rock chip result, then we'd seek to drill that ourselves. It's, in the grand scheme of things, relatively cheap. But, we need to continue to work with our consultants on that and decide whether or not it's worth someone else coming in and conducting that work. Do you anticipate the VMS deposits to grow in scale once you explore them further? If so, what approx size is your target if you compare them with typical VMS deposits in the country? Look, I really like this question, Ian, so thanks very much for asking it. We've maintained with Vancouver that Vancouver is what we call a distal VMS. And what that means basically is the mineralization has travelled a little bit further from the source, from the volcanic source that's initially come out of the eruption. And so it's travelled and it's settled in sediments. And what you find is different minerals travel different distances because of their weights. And so you can use those statistics to try and zoom in on something being closer to the source. There's also something which I'll struggle to comment on because I'm not the geologist, so I would definitely defer to my exploration manager. But in essence, it's in reviewing the core, the shape of some of the mineralization looks like it's been turned over and has travelled as well. And so that's another indication that we're not in the source, but we're potentially close to the source. And so for Vancouver, as an example, we would like to see, and we certainly will be planning EM, which is ground electromagnetics, over that target. And if there's a conductor, we'd like to follow that up. deposit size, could be anything based on the region. Some of the largest ones in this part of the belt go up to 60 plus 70 million tonnes. Anything from 10 to 30 million tonnes would be pretty outstanding if we can find a massive sulfide source. So that's for Kuba as an example. Certainly, I could argue the same for Rulika, both the existing deposit. It's not had a significant amount of drilling. The exploration target is primarily made up of 3 drill holes. So clearly that wouldn't be enough for a JORC resource today, even if we had the drill core. And so we, would like to follow up on that further and see, the potential size of what that could be. But it hasn't been closed off by that drilling. And so, we don't really know the potential size of it. Talovskoy and Rulika North, absolutely the same. We haven't even found the massive sulfide source yet. So if we do manage to find that, then, those first drill results will dictate the potential size there. But, I've said before, the moment, the very second we feel that we don't have a deposit which has a outsized risk reward ratio for taking it further, for investing and seeing if it could become a development asset, we will stop spending money on it. I do not intend on spending shareholders' money on assets to try and fluff up the market or progress something that we don't feel has economic potential. And so we will stop spending money on assets which we don't feel have that potential outcome. Mark has asked, can you please give a sense of the interest from other mining companies in relation to the recent JVs and how that interest has affected the outcome? I'm not 100% sure I understand the question, to be perfectly honest, Mark. What I guess on announcing them, what's been nice is having a lot of really positive conversations with other major mining companies. BHP Explore program, I think, put East Star on the radar of a lot of these companies and validated the team and validated Kazakhstan initially and validated our strategy. A year and a half later, or not quite a year and a half, we were able to sign a joint venture with Endeavour Mining. So I think that was, largely as a result of the publicity we got from that Explore program. And I suspect that, the current announcements are very much the same as well. We are getting, some inbound interest as a company. If you're talking about as a potential takeover, then I certainly haven't had any approaches. So I hope, I wouldn't say that that's something that would be on the cards today. It's very easy for us to have conversations with all the major mining companies on anything that we're doing, on any potential porphyry target or whatever the case may be. So if we like the target, it's very likely they'll like the target. And if there's something that we can do there in terms of joint ventures, if it's not already promised to Endeavour or Shanghai, then we're happy to have those conversations. How should we now think about valuing East Star post the joint ventures? The duration of realising shareholder value seems considerable. How can that gap time horizon be bridged? What catalysts might drive shareholder returns in 2026? Just trying to think about the question there, Mark, when you talk about the duration of realising shareholder value, because there are exploration companies with almost no assets on the London Stock Exchange that have a similar market capitalisation to us. There are companies that have a market cap 10 times our valuation and more, which have assets which I could tell you I don't believe will ever get into production. And so, to comment on the duration of realising value really depends on what you want as an outcome. There are other companies that have been operating for decades and are trading on a yield of 10%. And so if shareholders choose to value us as a yield play when we're in production, then that's certainly not exactly where I'd like to be as a company. But what I want is to deliver less dilution to exploration success, and
just bear with me while we reconnect Alex. Alex, bear with me 1 second. We'll connect you. There we go.
apologies,
You're back.
was asked if. Okay, I'm not quite sure when I cut out then. So
literally missed like a little sentence just discussing that. So it was a couple of seconds only.
Okay. All right. Thanks, Paul. So yeah, basically, my intention is to deliver shareholder returns by demonstrating value and trying hard, not to dilute them in the meantime. And we'll look at all strategies to achieve that, whether it's listing on the ASX to get a fairer value, if we were to get that on the ASX, whether it's being a minority shareholder in an asset like Vancouver, which someone else is paying to put into production. I'll perpetually assess, and the team will perpetually assess all of those options that are presented to achieve that outcome. So yeah, it really depends on what you're looking for as a shareholder. If it's a dividend to pay back your investment, then yeah, Vancouver will likely be the first, which is unlikely to be until I would say 2028. But if it's exploration success, well, we could deliver that at any moment. Yeah, that's really up to you. If you're just looking at the fact that E-Star is trading today at a big discount to the value of one deal, being the Shanghai deal, and that's only from an investment perspective, not from an NPV or asset return perspective, well then, all we have to do maybe is wait for these 3P warrants to get exercised and stop the selling pressure, and then you could have a bigger return in Q1. But I've never been one to try and predict the market, so I'll leave that up to you. Would there be more JV potential in the remaining assets? Yes. Thanks, Mohammed. Thanks, Hamid. Anil, are the assay results which are due, yes, good point, around September, October, expected anytime soon? Is there a reason for the delay? They have undoubtedly taken significantly longer than we wanted or expected. And I've commented in the Crux interview and recently that E-Star has to revise its assay strategy in Kazakhstan. Both the time frame that we log and cut core and get that to the assay labs, and then the time for the assay labs to get them back to us has been way longer than expected. So that's something which we will be revising our strategy on, potentially using different labs in 2026 to diversify who we use on that front. Yes, they are expected, and we really hope to release those results to the market in the very near future. Previously talked about, sorry, this is scrolling up. You've previously talked about the example of how Independence Group effectively used joint ventures to build up a $1 billion company. I think it must be 7 or 8 billion today, actually, I haven't checked. Could you outline your hopes for E-Star and potentially following a similar strategy, as well as how the board will guard against the dangers of minority stakes in regards to a future low ball takeout? So I suspect that's the low ball takeout is with regards to E-Star proper. Just for the market, Independence Group is a company which I quite like their strategy of how they turned into a large company. They had lots of assets. They joint ventured a series of them early, and they had success with Anglo Gold on a project which ended up being the Tropicana Gold deposit. And, by the time Anglo finished their carry on that project, Independence Group had to find a way to fund building that asset, which was not an insignificant amount of money. I can't recall the specifics, but it would have been in the hundreds of millions. Now, Independence Group had other exploration success, and they also conducted M&A to get the size of the company that could either raise the capital or have the cash flow from other assets to be able to defend that development. And then ultimately that development turned into one of the most profitable, if the most profitable operation for the company. And so I would love to see E-Star in that position a few years from now. If we've got exploration success with Endeavour and and we have to find a way to fund our 20% to build a mine that someone of their quality is building, then I can't think of a better position to be in for a junior company. And so the question is, how do we get there? Well, one of them is that, we obviously announce any exploration success we have with Endeavour, and hopefully our share price goes up accordingly and our cost of capital is much, much lower because, we have an asset which has a feasibility study, which is likely to be progressed by, by a top 10 global producer. Another way to do that is progressing our independently owned assets, such as Rulika and such as Vancouver, and seeing what cash flow we can get from those operations, how we can extend the life of those operations once they are producing, and any other exploration success we can have. So, ultimately for us, it's down to the drill bit, but we've already started to demonstrate that we can partner with the right companies at the right time, and I'm super happy with that. For the time being, I'd be very happy owning 20 or 30% of an asset that someone who with serious build experience that can do things faster, cheaper, and better than we certainly know how to do, I think is a really good strategy. If eStar in time builds the team that can build mines, happy days. That's fantastic. I'll tell you today, that's not me. I don't know how to do that. But we'd have to bring in, the right people to do that at the right time if that's the correct way for the company to go forward. All options are on the table, Oliver. For us, it's risk reward on a per asset basis, and I'm quite happy with our strategy today. And I firmly believe it's the strategy which can see us at $1 billion+ valuation. During your interview with Crux Investor and today you're casually dropping $1 billion company. How confident are you with this comment and an aspiration that you can give a timeline and when you expect this, please? Yeah, look, that's fair. It's a very fair comment to say it's an aspiration. All right, I want to be quite clear. I don't value eStar at $1 billion today. That would be pretty spurious of me, but it's certainly an aspiration. And I think in today's mining world, the sorts of companies that do reach those valuations either have global tier one deposits, that end up being purchased by a major, or they have production with the ability to grow that production profile because of their exploration success, which ends up being purchased by a major, or they do it internally. You've got groups like Sandfire Resources in Australia, which achieve that valuation off one asset. It was an exceptional asset, and they discovered it and built it themselves. So it is an aspirational valuation, and I can't defend it today. I can say that, I believe that we're sitting on assets which, if proven and if put into production, could get us at least halfway, if not 3/4 of the way there. But I can't say that I'm sitting on an asset today which I believe today has $1 billion valuation. So it's aspirational, Hamid. You're welcome to join us for the ride as long as you like. Christoph, are there research notes covering eStar? Not up-to-date ones. Cavendish covered us last year. Since then, they've changed analysts, and I haven't paid for any research yet, and I haven't had that conversation as yet. I've had a focus elsewhere for the time being, but I certainly hope now that we don't need to worry about raising money anytime in the near future, that's something I can go back to and perhaps give some of these investment banks and other service providers a bit of a push. I think that, anyone conducting research and reading that research will have a see-through valuation at a pretty significant premium to where we are. So, yep, that's something which I will push in early 2026. And the last comment.
Yeah.
So thank you very much, all.
Alex, look, thanks very much. I'm sure it's hugely appreciated. You've answered every single question you've had through today, so thank you for that. Just before redirecting investors to provide you with their feedback, which is particularly important to you and the team, can I challenge you just for a few closing comments, please?
Certainly. Well, firstly, thanks again for everyone for spending the time listening to this today. I thought I'd get through it a bit faster, but there were quite a lot of questions, so I really appreciate the questions coming through. I hope you appreciate my candor and transparency. You know, eStar is not intended to be a fly-by-night company. It's a company that we are desperately trying to make good, sensible exploration and investment decisions to achieve the best outcome for shareholders. And I really feel that we've started to deliver that outcome, you know, certainly over the last few years, but definitely over the last couple of months with some additional external validation. My hope is that next year we'll be spending well in excess of you know, $3 to $5 million on exploration, at least $3 million undiluted to eStar shareholders at eStar company level. And then we'll be making sensible decisions on our own expenditure on exploration, but for outcomes that we feel will provide, as I said, outsized returns to investors. So thank you for all your support to date. You know, 2026 is a really, really exciting time for eStar. The journey isn't over in signing these joint ventures. It's only just begun, and the next couple of years will be exceptional, I believe, both in terms of the copper and gold price and eStar's leverage to that. So thank you all very much.
Alex, thanks again for updating investors today. Can I please ask investors not to close this session? You'll now be automatically redirected to provide your feedback. Lord Alex and the team can better understand your views and expectations. This will only take a few moments to complete, and I know it'll be greatly valued by the company. On behalf of the management team at eStar Resources PLC, we'd like to thank you for attending today's presentation. That concludes today's session, and good afternoon to you all.